Welcome back to U.S. Farm Report. Dwayne and Arlen rejoining us. All right, so much of the focus right now is on Trump's trade agenda and what he decides to do with tariffs. But Arlen, what is the greatest threat to trade with China? I mean, is it tariffs or is it the strong U.S. dollar that we're seeing right now?
I would argue it's a dollar. We all know that Brazil's been rapidly increasing the area they plant the soybeans, therefore increasing soybean production. The pace of that expansion has really increased from around the 2011, 2012 crop on. So I went back and looked at their currency, the real, and the conversion rate back in July ahead of that planting season, 2011, 2012, was 1.53 rias per dollar. And at that point, spot soybean futures, which they sell off the Chicago market and then convert it to rias, that converted, it was $13.50 per bushel. That converted to around 20.6 rias per bushel for the Brazilian farmer. And of course, today we know that we're quite a bit cheaper than that. Even with the rally we've seen, we're still, about 21% or so cheaper than what we were there in the $10 range. But at today's conversion rates, it converts to around 63 rias to the dollar, to the bushel, excuse me. So 3 times the rias. Now, their imported chemical and fertilizer is far more expensive. So I don't want to say that profits have gone up 3 times, but it certainly has paid to them to incentivize them to expand production. And then when those soybeans go on the market, currency exchange rates really favor them than to buy. So as Dwayne was indicating, we're currently about $1.20 more expensive at the Gulf than what we are Brazilian soybeans for February shipment. That'll probably expand closer to $1.50 cheaper as go forward. So the strong dollar is our biggest problem right now, not tariffs.
Even though the strong dollar may be our biggest problem, Dwayne, we have seen the volatility that just one phone call, one threat of 10% tariffs or 25% tariffs, what that threat and what that those phone calls can do to the volatility in the market. I mean, what is your expectation as we move into this planting season, seeing even the volatility we saw this week?
Yeah, I know last Friday when Trump called President Xi, that was kind of a shock to the market and to myself. And it was kind of an eye-opening of like, well, I guess the Trump trade has started. And, no expert's going to be able to see things like that coming. Now, it's been very good. We've had a really nice soybean rally since. But, as you can tell from Arlen and our conversation here, the fundamentals don't look great moving forward. So I think farmers got to just step back. And when you get this volatility, take advantage of it. I mean, I love the funds buying soybeans, but I am kind of scratching my head just a little bit of why and how far they have to go. So we've been kind of instructing people to sell their old cotton beans on this rally and get a start on the new crop as well.
Dwayne, we can go ahead and argue about acreage, but there's a concern about dryness out there, especially in your neck of the woods up in South Dakota. I mean, there's been more, as you pointed out before we started recording, there's been more snow in the panhandle of Florida than there has been in your backyard.
Yeah, right. That's a little ridiculous, isn't it? And when you think about that in general, it's like, wow, maybe we do have a drought coming from the Southwest up through the plains. But, I don't know. I'm in this prevent plant hole, of course. So I love it to be dry in the spring. And I think we need the corn acres. So drought right now doesn't concern me, Tyne. But, man, you get all this mix going in. If we get dry in June, it could be pretty interesting again.
But Arlen, we saw these extreme cold temperatures happen in areas that don't have snow cover right now. Is extreme, the cold and damage a concern for the U.S. winter wheat crop?
Oh, it certainly is. Now, I grew up in wheat country, worked a lot with wheat with the extension service prior to working in risk management. I've walked thousands of wheat fields, and they don't always follow the textbook. What the textbook tells us is you can start getting damage when the temperatures drop 5 degrees below zero and colder. And we saw those types of temperatures without sufficient snow cover all the way from the Texas Panhandle to the eastern Midwest. And if you look at the plains hard red and wheat crop, where the coldest was most intense, 2/3 of the crop had conditions ripe for winter kill damage. Now, it's difficult to sustain a rally until you have proof of it, and we won't have that till the crop breaks dormancy in another 4 to 6 weeks. So that's why the market kind of hesitated and paused again after a quick rally on it. But with the world supplies tightening up, I do think it does provide some support underneath this market, particularly with problems with the Black Sea crop as well.
Arlen, Dwayne, thank you so much for joining us this weekend. We appreciate it. We need to take a quick break, and then it is a very rare tractor. It's a treat, really, in Tractor Tales this weekend with Machinery Pete. Stay with us.
Be part of the live audience in San Antonio at the 2025 NCBA Cattle Convention. Don't miss U.S. Farm Report host Tyne Morgan's live taping with industry experts February 5th at noon.